Good morning, everyone, and welcome to the second webinar of the Securities and Exchange Commission webinar series. And today we will be looking at unlocking agricultural value. And our speakers are lined up. We're just confirming one of our speakers. We thank you for joining and would like you to give us just a few minutes to confirm that we are properly configured and have lined ourselves up so that once we commence, we go through in a fairly orderly fashion. So welcome to you all. Thank you for being punctual. And I'll return in the next 2 or 3 minutes, hopefully for us to begin our discussion. Thank you so much. Good morning, everyone. My name is Farah Mpofu. Apologies, I had a slip there. My name is Farah Mpofu, and I am the Policy and Market Development Team at the Securities and Exchange Commission. We apologize for keeping you waiting. We were trying to manage issues of protocol, where it would have been our preference for our speakers to present in a particular order. Nevertheless, we have made the necessary adjustments so that we can accommodate the entry into our meeting of our presenter from the ministry. So at this stage, let me make a few introductory remarks, which will enable us to catch up with time so that we're not running too far behind. We have two speakers lined up this morning. We were going to have some remarks from the Commission, but I think in the interests of time, we are going to ensure that we maximize presentations from our two speakers. So I see that Dr. Mbwenje is now with us, and Doctor, please note that we will now keep the same order of presentation and allow you, sir, to go first. And then you will be followed by Mr. Tapfumane from FINSEC. So allow me, sir, just to make these few remarks while you settle down, and just to confirm that we see you, you are clear, and I'm certain your audio will be as powerful as the image. So participants, thank you for your patience. We have with us today the Ministry of Lands, Agriculture, Fisheries, Water, and Rural Development, and also the Zimbabwe Mercantile Exchange, which operates under FINSEC, one of the exchanges regulated by the Securities and Exchange Commission. The discussion will center around the demystification of warehouse receipt system, a market-driven mechanism, which you will hear more about as the topic unfolds. Its purpose really is to provide greater access, greater depth, storage benefits, access to capital for our farmers around the country in this primarily agriculturally driven economy. So with just those few remarks, let me just say that we have Dr. Clemens Mbwenje from the ministry, as I've already indicated, and I'm sure when he commences his presentation, he will say a little bit more about the ministry that he comes from and the role that he plays there. And we also have Colin Tapfumane, the CEO of the Excro Group. So without any further ado, Dr. Mbwenje, let me invite you to share your screen. And in the process, if you'll say something so that becomes the audio test, and we will give you the time to deliver your presentation. Over to you, Dr. Mbwenje.
Thank you. Just confirm if you can hear me.
You are loud and clear, confirmed.
Thank you very much. I had not really prepared a presentation, but rather some remarks on the ministry perspective on structured markets and how they promote agriculture transformation. So with your permission, I would probably read. I think I'm now learning to be a politician. That's why I'm getting to scripts now.
We are very comfortable with that format. Would you like to have your camera on or off? Currently, it's off.
Okay, I don't mind.
Perhaps thank you so much. And
yes,
the picture is good. Thank you. Over to you.
Yeah, so I'll speak really to the ministry's perspective on structured markets and agricultural transformation. Really, this is an interesting subject for us as the ministry, and we are very, very pleased to be part of this important webinar. And I wish to extend my sincere appreciation to the organizers and all those that had anything to do with ensuring that this webinar materializes as planned today, but also we want you to be associated with the beyond this webinar, that is with implementation of the outcome. Let me start by saying that the ministry's approach to agricultural transformation recognizes the importance of markets in general, and in particular, structured markets. So I'll take this opportunity to just give a little bit of a policy background in terms of what is guiding the agricultural transformation, and then we can pick out from there how that is really also coming about as a result of market structured markets. Now, you realize that in 2020, we developed an agricultural food systems transformation strategy, which was running 21 to 25. This was really focused on policy, investment, innovation, and collaboration and partnerships, initiatives to drive agriculture and food systems transformation. And really, the approach was a value chain approach. Now, in 2025, that is last year, the ministry revised this first generation of the food systems transformation into the agriculture food systems and rural transformation strategy 2, which is running from 2026 to 2030. And recently, this was launched by His Excellency, the President of the Republic of Zimbabwe. Now, this strategy continues on value chain and food systems approach to transforming rural areas and is anchored on 10 pillars. I will not run all the 10 pillars, but what I want you to note is that of the 10 pillars that it is anchored on, one of those pillars is actually markets and trade development. So, the ministry's perspective with respect to markets and transformation are actually integrated and translated into policy through these two blueprints. The first one that ran from 2020 to 2025, and the second one that ran from 26 to 20, that will run from 26 to 2030. Now, initiatives that foster structured agricultural markets are integral components and will continue to be very critical elements of every value chain intervention that we have to transform agriculture. And some of these initiatives, they include climate-proofed input schemes. You are aware of the National Enhanced Agricultural Productivity Schemes, irrigation development, capacity building, value chain financing, and a lot of other projects. Now, these initiatives, they have a deliberate focus on access to quality seeds, access to fertilizers, inputs in general. They have a deliberate focus on climate smart agricultural practices. They have a deliberate focus on enhancing extension services and also investment in irrigation infrastructure. Now, you notice that as we implemented these transformative initiatives, today Zimbabwe has witnessed a significant improvement in inclusive value chain and sustained increase in sustainable production and productivity, especially in such value chain as maize, wheat, soybeans, tobacco, horticulture, and dairy. Now, as we bask in this glory of these improvements in production and productivity, the ministry is alive to the fact that such increase in production should be made by sustainable and inclusive market innovations that connect farmers, local farmers, to viable and competitive local and international markets alike. This background, colleagues, brings me to the subject of today, which is structured market. As the ministry, we have come to understand that structured markets are organized and regulated platforms that connect buyers and sellers of agricultural commodities that provide a transparent and efficient way of trading agriculture commodities. These markets include commodity exchanges. They include warehouse receipt systems and other innovative market solutions such as electronic trading platforms for commodities, contract farming arrangement between farmers and buyers, value chain financing mechanisms, cold chain facilities for perishables like fruits and vegetables, but also agro-processing facilities for value chain. Now, we have also come to understand so well that structured markets are a critical facet of every value chain intervention. If any such initiative is to bring about agriculture and rural transformation, that is, if it's going to contribute to poverty reduction, reduction of hunger, and elimination of malnutrition. Structured agriculture markets increase access and reduce post-harvest losses. They improve price discovery and reduce price volatility. They enhance access to finance for farmers and traders, and also they promote a value chain, they promote value addition and agro-processing. Now, the spirited implementation of our blueprints has not only facilitated the implementation of the establishment of structured agricultural markets in the form of ZMX, but it is also continuing to create an enabling policy environment for structured agricultural markets to thrive. The most recent initiative to foster structured agricultural market is the partial liberalization of the grain markets. While government has continued to announce producer prices for wheat, maize, soya, traditional grains, and sunflower, these prices are only for the grain marketing board for government-supported farmers, and also any other willing sellers for that matter. But the journey really to promote structured markets started much way back with the enactment of the Warehouse Receipt in 2000, Warehouse Receipt Act in 2000, I think it's 3 if I'm not mistaken, with the designation of the Department of Research and Specialist Services as the Warehouse Receipt regulator. And the idea was that they can steer the operationalization of the warehouse receipt system. This was followed in 2009 with the establishment of the Agricultural Marketing Authority to regulate and ensure fair marketing of agricultural produce on the market. Now, working together with the private sector, in particular FINSEC, World Bank, the Ministry, AMA, we developed the warehouse receipt regulations. We also developed the commodity exchange regulations. And this culminated in the formation of a PP in the form of the Zimbabwe Mercantile Exchange. And today, we have a total of 49 crop and livestock commodities that have been successfully onboarded on the warehouse receipt system. While success has been recorded on crops, we are aware that there is still some work on the Warehouse Receipt Act to recognize storage facilities for livestock in order to operationalize the warehouse receipt system that pertains to livestock. The ministry is already seized with this matter. Now, as I look forward, the ministry's view is that structured agricultural markets can increase agricultural productivity can increase competitiveness, and they can lead into improved livelihoods for farmers and rural communities. They can spur agricultural development required to move up the value chain and achieve rural industrialization. Rural industrialization, which will bring about a rural development in the form of poverty reduction, hunger reduction, and elimination of malnutrition. So structured markets, our view is that they are key to private sector participation and central to attaining Vision 2030 of an empowered middle-income society by ensuring development is driven by communities for communities. As we pursue the economic integration agenda and positioning ourselves to effectively participate and benefit as an equal partner from regional and continental trade, free trade areas such COMESA, involving COMESA, SADC, the Africa Continental Free Trade Area, we must see structured agricultural markets as the launchpad into these increasingly volatile global markets. And we need to anchor that move on regional partnerships of equally organized markets if we are to be competitive on the global market. So we are happy. We know that ZMX is part of the an association of commodity exchanges, and that is very important for us as we pursue the economic integration agenda. So the ministry remains committed to investing in structured agriculture markets to address the various marketing challenges that farmers are facing, including produce that is rotting on the roadside. This process should build on existing agriculture market policy instruments, such as the warehouse seed system, the input subsidy system, producer price support, the strategic grain reserve, contract farming support, and also the stop order systems. These instruments, we have come to understand that they have been fragmented for a long time, operating in isolation or in some low impact combinations, and that has mostly happened with a very limited relationship to the structured markets. And therefore, they have been losing on the potential synergies between the policy instruments. So our strong view going forward is that structured markets can offer an opportunity to integrate all these grain production and marketing policy instruments and create a coherent and synergistic framework that balances food security, fiscal and monetary targets through an efficient and effective risk management, ensuring fiscal independence and promotion of more stable and more market-oriented agriculture and rural economy. Having said that, colleagues, I want to hasten to acknowledge that this view is still a gray area that requires further research and technical assistance to establish the feasibility of integrating these market tools. And it is in this regard that we invite and look forward to collaborating with the development partners, the private sectors, and all other stakeholders to explore this opportunity so as to unlock the full potential of Zimbabwe's agricultural sector through structured agricultural market that effectively integrates the available market instruments. I thank you.
Dr. Mbwenje, Chief Director for Business Development, Markets and Trade in the Ministry of Lands, Agriculture, Fisheries, Water and Rural Development. We thank you for your remarks. We thank you for your presentation. You have touched on a number of areas that many of us would not have known, including the historical issues, the blueprints that you have referred to, and the fact that structured markets are not a new discussion, but I think what we are seeing is operationalization impetus as a result of the various partnerships that have taken place between the private sector, government, and various organizations, including regional bodies and other interested organizations. Thank you so much for your presentation, Doc, and we look forward to being able to interact with you a little bit more as soon as we've had the presentation from Colin. And in response and to perhaps expand on the comments you made about regional cooperation, the only thing I will say to introduce Colin is that he sits on a number of boards within the region, but more importantly, he was recently elected chairman of the Committee of SADC Stock Exchanges and is also a steering committee member of the AFTA, Association of African Commodities Exchanges. So certainly as a member of the Zimbabwe capital market, his credentials are not confined to Zimbabwe, and I think the regional visibility will serve the structured markets drive very, very well. So at this stage, let me invite Colin to share his screen and take us through his presentation, and to thank you again, Dr. Mbwenje, for your remarks. Colin?
Thank you very much, Farai. So I'm going to put in presentation mode. Please confirm that you can see my screen now.
Confirmed. Thank you, Colin.
Thank you. Good morning, ladies and gentlemen. Thank you, Dr. Mbwenje, for the opening remarks and the ministry's support as always. Thank you to Securities and Exchange Commission for arranging this very important webinar. I take it that we are now looking at the capital markets, linking capital markets to our commodity markets, to our agricultural sector, and linking investment to our primary production. So I appreciate this opportunity, and I am very delighted to be contributing to this session. So I represent both FINSEC, which is the Financial Securities Exchange, and ZMX. So before I go into the slides, just a little bit of a background in terms of the link and relationship between FINSEC and ZMX. FINSEC is a licensed securities exchange under the alternative trading platform category and within the framework of the Securities Act. So it operates an exchange that facilitates raising of capital and trading of securities. Now, FINSEC embarked on a journey to introduce commodity markets, commodity trading and finance into the financial sector. And because we did not have a harmonized, all-encompassing law that would immediately enable us to immediately start operating as a commodity exchange, we had to work with the acts that were in place then. So firstly, the Agricultural Marketing Act that speaks to how agricultural commodities are traded was very important. And then the Securities Act, which now speaks to the securitization or the securities. So ZMX and FINSEC are then a combination of meeting the requirements of those acts for us to be able to come up with the commodity exchange. So FINSEC is the operator of ZMX, and the two work in complementarity. So Speaking about ZMX, it's a private sector initiative registered under the AMA Act and is designed to operate a warehouse receipt system and spot market trading. And it is, as Dr. Bwenje mentioned, it is a PPP. Government is also a part of the initiative as a shareholder. It leverages technology and as alluded to earlier, we are a member of the AFCFTA Association of Commodity Exchanges. So the context of setting up this, I think, has been well explained by Dr. Bwenje, but we came in at a time when transformation in our market structures around the commodities, agricultural commodities, was taking place. And with the promulgation of the various acts, we ended up coming up with a warehouse receipt system that looks at a centralized database of all commodities after harvest that are graded, stored, and convert them into financial instrument through the warehouse receipt system, as I'll be explaining further. Just a little bit on the legal framework, because we are in organized regulated markets. I just thought I would share the legal instruments that on the basis of which we are doing this work. So obviously, firstly, the Companies and Other Business Acts, under which ZMX is registered and then approved through ZIDA framework as a PPP. And then it has already been mentioned that the starting point was the enactment of the Warehouse Receipt Act, and then the Warehouse Receipt General Regulations through Statutory Instrument 224 of 2020. And around the same time, the Securities Act was updated with the recognition or declaration by the minister that warehouse receipts were now recognized as securities. Meaning, when you think of shares, when you think of bonds, when you think of medium-term notes and all that, warehouse receipts will be in that category. The ZMX trading is licensed and regulated by Agricultural Marketing Authority, while the FINSEC is regulated by the Securities and Exchange Commission. ZMX is governed by the AMA ZMX Rules SI 184 of 2021. There is also the issue of we are coming from an era where grain trading was governed by the GMB Act, which was liberalized through the gazetting of SI 56, which allowed ZMX to start including maize and other strategic commodities. So the legal foundation is quite firm and strong. That has enabled us now to try to catch up with the international best practice in terms of the commodity markets. So ZMX is a platform that connects various players, from our primary producers, their contractors, the agro processors, investors, traders, supported by our custodian banks, our settlement banks, and enabling financial service providers such as lenders, MNOs, and all that to participate. And because we are looking at the physical aspects of things, the ZMX structure incorporates transporters and logistics companies and warehouses, as well as the regulators. 49 commodities are eligible for the warehouse receipt system, and 19 commodities under the grains and oilseeds. This is where you have most of the dry commodities that are physically stored in the warehouses across the country. Then we have horticulture. We have 22 under horticulture. These require specialized handling. And also we have livestock that has also been allowed through the statutory instruments, where we will also try to securitize various livestock to ensure that they are accessible by investors and capital market ecosystem. So the rest of the presentation is split into 4. So firstly, it is to look at the physical side of the warehouse receipt system and how it then dovetails into financial instruments and financing opportunities. So the warehouse receipt system, it starts with the Warehouse Receipt Act, which requires not every warehouse operator and not every warehouse facility can be eligible. So there is a whole process that is overseen by the registrar of warehouses that enable the licensing of certified warehouses. That means when a warehouse becomes certified, it has been deemed suitable in terms of its physical facilities, in terms of its staff's competence, in terms of its equipment for grading, for inspection, and for weighing and all that. So on top of that, then ZMX comes in with its now specific standards and enforces operational standards regarding grading, reporting, inventory management, and ensures that the warehouse has integrated systems that integrate into the central warehouse receipt system operated by ZMX. Then after the admission and registration of a certified warehouse, it will then be under obligation to report to ZMX, who performs continuous monitoring and oversight of the warehouse with respect to any grain or commodity that will be covered by issued warehouse receipt instruments. So a little bit of elaboration on the grading, quality, and collateral management, which is a fundamental part of the physical handling of the commodities. Now, after doing the physical side of things to say which warehouse is suitable, what equipment, what physical facility, security, insurance, and all that, the grain starts now going into certified warehouses. And when that happens, we now see a process of the issuance of warehouse receipts and the securitization journey starts. Now, in this case, we are looking at the issuance on a centralized system of warehouse receipts, which confirm the quantity, the quality, the grade, the location of the particular grain. And that warehouse receipt becomes an instrument. It serves many purposes. It is evidence that you own a commodity. It is evidence of the quality. It is evidence of its security. That warehouse receipt now is what is then recognized by the law as an instrument that enables now financial services participants, capital market participants to now create products that bring in liquidity into the market. So this is an example of the warehouse receipt. So it's not a receipt, normal receipt like you get in a shop and all that. It's actually a very legal document. So the receipt that you see there is actually part of the law. So in the Act and statutory instrument, the design and the fields and everything that needs to be populated there is specified by the law. This is issued by the warehouse operator through ZMX's centralized warehouse receipt system, and each warehouse receipt is required to show the product quantity, the quality, the storage location, as well as the information pertaining to the holder and their details. It is issued both as a physical receipt, as well as converted into electronic. Once it is deposited into the custodian, then the electronic version is then available, and a farmer will have it in their phone. It can be on various platforms. The receipt will show, I've mentioned this, the name and address, grade of the commodity, weight, measure, name and address of the warehouse, and the inspector, market value as the date of deposit. And some of the features that it has been given by various laws. Number one, it is recognized as a security. Number two, it has been granted liquid asset status by the Reserve Bank of Zimbabwe, meaning it is recognized as an instrument that can be easily converted into cash without significant value loss. It is tradable, and it can be used as collateral. What can be done when someone has the warehouse receipt? So we are imagining a farmer in Mutoko, and he has deposited his grain, and he now has this receipt. It can be discounted while waiting for an off-taker. It can be used for credit collateral. So in the first case, if it is discounted, you are just saying, okay, the value might be $10,000, but I'm willing to accept $9,500 and pass it on to either a financier or anyone else who might want to buy it at a discount. That means you are then basically letting go of the ownership. But it can be used for credit purposes. So I do not want to part with my commodities, but I want to use it as collateral so that I access loans. That is warehouse receipt lending or warehouse receipt-based lending. It then can be used for trading, and on the ZMX spot market, when you are making an offer, you are making an offer to sell whole or part of your warehouse receipt. We have also innovated where the receipt can be used to swap with inputs. So one season dovetailing into the other. If there is a glut in the market and the price is down, you then have an option to actually, swap it with an input supplier, get inputs, and the input supplier can hold out and get their value later. It can also be used for production financing. We have there was mention of livestock warehouse receipt, a few polishings up that are being undertaken in the moment in terms of the law. The intention there is to say when you have livestock, which then can qualify and issue a warehouse receipt is issued for livestock, a farmer can use that warehouse receipt to finance crop production, putting livestock as collateral through the warehouse receipt. Then the securitization does not end with just the underlying commodity. We are looking at an opportunity for securitization of warehouse receipt infrastructure, the warehouses themselves. So we have silos, we have warehouses, but at the moment they are not adequate. So an opportunity exists to securitize the development of warehouse infrastructure for warehouses that can then become part of this program. We have just 31 across the country in 7 provinces or so, but it is our desire to have at least 100 warehouses across the country or more. So there can be REITs that are linked to warehouse receipts. Now we have tokenization framework. We can actually securitize through tokenized warehouses so that an investor actually earns a return from the use of the warehouse, because the warehouse, this is real estate that has a unique income generating model, in the sense that you are going beyond just earning rentals from real estate, but the activities of the warehouse itself at the center of agricultural value chain, grain coming in and out, graded, sold. The warehouse operator becomes both a real estate provider as well as a service provider in the movement of grain in and out, season in, season out. So there is a lot of innovation opportunities available in developing suitable and adequate warehouse infrastructure. Now, after talking about the physical side of the warehouse receipt system and then the securitization of the warehouse receipts, now that the farmer now has the warehouse receipt, what then happens? What is the impact on the markets? Firstly, commodity trading. So commodity trading is split in two. This is where the convergence of the AMA side of things and SEC side of things come in. So the physical trading of commodities is governed by the AMA Act, which enables ZMX to provide a spot market for the commodities. So you no longer need, a farmer doesn't need to drive a truckload from Mangura to take it and try to sell to someone in Harare. What they just do is to use the warehouse receipt, and that is the instrument that is then put onto the market, on the spot market. It is regulated by AMA. The underlying physical commodities, exchange-based trading, and the current status is the market for that is mature, and we have been trading these commodities successfully for the past 2-3 years now. The trading mechanism is where we have a combination of auctions and continuous trading. A settlement is physical delivery settlement, and the active participants on this are farmers, traders, processors, and buyers. Alongside that, we are now developing the derivative market for these commodities. Now, this is where the Securities Act comes in, and this is where FINSEC and SEC ZIM come in. This is where now we are looking at trade risk management and price discovery instruments, trading under derivative instruments whose underlying are the commodities but delivered through the warehouse receipts. At the moment, we have not yet gone into exchange-traded derivatives. We are currently focusing on OTC derivatives, forward contracts, and we'll be developing that into futures contracts on commodities. A lot of people will talk about SAFEX and all that, so we will eventually have our own SAFEX equivalent. So trading mechanisms, we are looking at bilateral OTC contracts, cash settled, and this is for largely hedgers, traders, financiers, and institutional participants. Our spot market for the commodities, we have both a continuous market and an auction market. The continuous market is always open, and buyers and sellers place orders that can be matched instantly if there is a price convergence and all that, and the highest price will be matched against the sale order. Settlement is on a T+3, just like we do in the securities market. They will then have, complementing the continuous market, we have an auction market, which runs every Wednesday, but we are considering for the next marketing season to have it run on a daily basis. Buyers and sellers place orders during the auction period. The orders are matched at the end of the auction, which means there will be a clearing price that is then considered at the end of the auction, which is the price where the most quantity is matched. Settlement is again on a T+3 basis. Our forward contract market, this is actually increasing in popularity. This is where we are saying to millers, to agro-processors, right at the beginning, before the marketing season starts, enter into forward contracts so that we determine the level of demand, the pricing that you are looking at, and your delivery schedule, so that the contractor is not burdened with buying access to what they need, but they indicate their schedule according to their to their production capacity. Once we have those contracts, we are able now to float them and ensure that we have the supply side signing up into those forward contracts. We match them, we register them on the exchange. Then we are able to determine whether our demand, expected demand, is being met by supply. If there is oversupply or if there is too much demand, interventions are then done. So that speaks to the trading. And now we go to the last part, which is trade finance. One of the benefits of introducing commodity exchange infrastructure is to ensure that investors and financiers have the peace of mind to facilitate and finance or oil the movement of our markets. So while I can go through the remaining few slides, I'll just quickly explain the very basic reason for doing this. If where we have seasons for most of our grains, like our maize is largely summer maize, which is going to be coming to the market shortly. So we do have one season for producing maize. This is the maize that agro-processors then need to process into mill, which has to feed the country for the next 9 to 12 months. Now, if all farmers came at the same time in April or May and say, here is 1 million tons, millers, can you buy that 1 million tons? The first problem is millers may not have storage facilities to absorb that grain. Number two, they may not and probably will not have enough liquidity to pay for the totality of 1 million tons at the same time. Now, either farmer has to retain some of it if it is not yet required by millers, which is at great cost because of post-harvest losses. Now, that is where we bring in the warehouse infrastructure, certified warehouses, to say out of the 1 million, If the farmers, the millers, first month they need 100,000 only, let's put 900,000 tons into certified warehouses. Create an instrument, bring it to the financial markets, and ensure that there are structures that enable all the farmers to be paid the equivalent of their 1 million tons without burdening the millers, and then the millers are going to offtake as per their production schedules for the rest of the 12 months. That is what requires innovation from the financial markets. This is where the link comes in between the ZMX, which is looking at the physical side, inputs, producers, aggregation, agro-processing, and FINSEC, which is bringing in now the financing side, pre-harvest financing, warehouse receipt financing, warehouse receipt discounting, and trade finance for commodity-linked instruments. This is because we cannot have a one-size-fits-all in this. We need to give our farmers options and choices, our millers options and choices. Some want short-term financing, some even for 1 week, some want 12 months facilities. We create instruments just with the purpose of ensuring that we absorb the grain, pay the farmers, and ensure that the millers are able to offtake the grain as and when they need. So the objective of the trade finance, to establish the trade finance framework that unlocks liquidity, enable people to take money from under their pillows, put it into this system, and earn a good return while ensuring that production, both on the primary production and processing, is done easily. So the short-term trade finance activities include supporting farmers, aggregators, off-takers, and then we'll have long-term trade finance as well, where we can have larger capital pools that impact our markets. So on the short term, we have introduced warehouse receipt discounting, we have introduced warehouse receipt financing, and that is on the farmer side. And then we have introduced the promissory notes and working capital facilities on the off-taker side. That means we would be having quite a number of options for investors and lenders, as well as a number of options for off-takers, with the impact of increasing trade velocity, reducing forced selling, and improving supply chain stability. So that is short-term financing opportunities, which will fall under the Banking Acts of short-term financing instruments are governed by the banking laws. Then long-term is where now capital markets come in. The objective is to transform commodity-backed trade exposures into recognized investment assets. So here we are looking at commodity-backed notes, for example, bills, medium-term notes, asset-backed securities, and listed funds. These will be issued and distributed to investors. Another option is in investment banking facility. 20-30 years ago, investment banking used to be thriving. We have seen it, kind of disappearing. We want that back, where you have a bank putting its balance sheet and creating brokerage services that can also play the role of absorbing these commodities, put them on their balance sheet, pay off the farmers, put in a small markup, and allow off-takers to take the commodity as and when they have the liquidity. Again, we will be making big announcements for that opportunity for those with the balance sheet and capacity to come in. What it does is it expands our financing capacity, diversifies financing sources, and it deepens our capital markets, meaning that our pension funds and all that can now legitimately put in liquidity into our agricultural value chain by partaking in international standard financing instrument. So I think that brings me to the end of the presentation. I thank you all so much for your attention. Back to you, Farai.
Colin, thank you so very much for your presentation. It provided so much context and texture following the remarks made by Dr. Bwenge. Thank you so much for your presentation. It's one of those webinars that, as I was looking through the names of participants, it's such a wonderful combination of people, from graduate interns students, practicing practitioners in the capital market, outside the capital market, a wonderful blend. And I think all of them, and I see your hand up, Doc, I'll be coming to you in a moment. And I see that another feature of this webinar is that whereas numbers usually decline halfway through the presentations, in this particular webinar, the numbers are climbing up and staying up while the presentations are in motion. So thank you very much to both of our presenters this morning. Dr. Bwenje, let me come back to you and ask you to kick off this post-presentation session. Kindly unmute, Doc.
Sorry, I just wanted to clarify on my title. I see you referring to me as Dog. I receive, but I'm yet to. But I'm yet to be one. My apologies for that. I just thought I'd clarify.
Thank you for that clarification. Thank you for that correction. You have our apologies. It's prophetic. Thank you so much, Colin. Participants, I don't see any questions in the chats. You have an opportunity to unmute and ask any questions or make any remarks you might wish to. But certainly I found the presentation very rich, actually quite dense. And I think we would need another session and repeat sessions for us to go far deeper into the various items raised, particularly starting from the end where there was a discussion on the long-term instruments, which are specific to the capital market. Thank you very much for that, Colin, for focusing our thinking. But I certainly appreciated the very wide background you gave and the fact that your activities are governed by a number of legal instruments which span a number of sectors. And what has been done here is it's the art of bringing so many disciplines, so many activities together. And I think the term you used, Colin, was all of it with a focus on primary production, primary agriculture, which ties up to Mr. Mwenje's submission on the rural industrialization, rural development agenda, which will directly tackle and reduce poverty, hunger, and malnutrition. Participants, if there are any comments from you, please go ahead and unmute. And I'm just checking the chat again to see if any questions have come through. Technical team, if you can see any comments in the Q&A, please alert me to it. And let me also ask Mr. Mwenje if you'd like to come in with a comment following the presentation that was made by Colin.
Well, normally when Colin is spoken, you'll have no. He speaks with that clarity that you will not have any question. He's like that. But just to indicate that you see this issue of structured markets, the issue of the commodity exchange, and in particular the warehouse receipt, how it links the commodity markets and the financial markets. I think as a country, we have not really explored the potential of these structured markets and their capability and their potential. We have not embraced these the structured markets. I'm talking here, for example, the Zimbabwe Mercantile Exchange that we have, and we are in there as government, as a shareholder through our grain marketing board. To me, this can be a platform, for example, it can be a platform for price stabilization, commodity price stabilization, through the strategic grain reserve, where just like the RBZ does its market operations with the treasury bills, So the strategic grain reserve can come to this platform, the commodity exchange platform, and also do its market operations. If the price is too high there, they put a grain from the strategic grain. If the price is too high, they buy. If the price is too low, they buy the grain. That way they are stabilizing the commodity prices without really controlling, but rather participating on the market. So I think we have not really explored what potential this structured market have in Zimbabwe. And I think this webinar is a starting point for me. If you listened to when I was concluding to say, look, let's explore this, and this is where we need the likes of World Banks, the likes of the FAO. We need them to come in and work with us and explore what are the innovations that can integrate all these market tools that we have on the platform to promote agricultural transformation. So I thought I would also add that. Thank you.
Thank you. Your comment is very timely, and again, you are proving to be prophetic. We are looking for alternative instruments for the market. I think certain sections of the market, in particular the equities side, is undergoing tremendous upheaval and transformation, and would need to be replaced by innovations and developments in other areas, including this one, Mr. Bwenge. So your comment is very, very timely. I wanted, though, just to use the remaining time to come back to Colin, to say, Colin, I think as a moderator, I could be under criticism for not insisting that you perhaps spend a little bit of time on the actual experiences to date, farmer experiences, off-taker experiences, in the way of challenges that you may have experienced, and also in terms of the successes that the warehouse receipting system has brought, and efficiencies even, to the creation of structured markets in the area of agriculture. Thanks, Colin.
Thank you, Farai. Yeah, so it has been a journey, and this is a big change. And with just like in any situation, change is not very easy, but it has been a very fulfilling experience. Starting on the successes, I think the whole legal process or legal instruments, the liberalization, starting with the policy change, has been a big success. Negotiating with the government to change policy, liberalize markets, break monopolies that were there. That's number one. Number two, government also embracing open market price discovery. So we have become the reference point for the past 2-3 years in terms of local prices for local grain, which is now starting to feed into planning. Thirdly, the certification of the warehouses, because the credibility of the whole system hinges on the credibility or the quality of the warehouse infrastructure that you put in. So yes, people are always associating warehousing with the GMB, which of course is the biggest, but we have all the in total 6 warehouse operators, 1 from the public sector, from the government, that is GMB, and 5 from the private sector, the likes of BAC, the likes of Origin, Northern Products. All of these we've managed to get them certified and be part of this and actively participating. The farmers, on the farmer side, it has also been a very good journey. We have introduced very simple platforms, WhatsApp chatbot and all that, and 90 to 95% of supply or trading has been coming from just ordinary farmers from all over the country, just using these simple platforms, which has been a success in terms of them experiencing what it is like to trade from the comfort of their homes. And we have probably registered almost all the major millers, and each one of them have at one point or the other traded on the market. Our auction has worked very well, but this has not been without challenges. A couple of our implementation coincided with our terrible drought here that sort of slowed things down. That's number one. Number two, because the commodity exchange is not mandatory, unlike other countries where if a commodity is listed, then all trading must be done on the commodity exchange. Unlike our stock exchange side, where if a company is listed, you can no longer trade shares outside of the stock exchange. But in the commodity markets is actually currently voluntary. On that basis, we still have the scourge of middlemen or makoronyera, if I may say, who still ravage our farmlands, picking commodities against groceries and all that. So maybe our inability to reach everyone, communicate loudly, make farmers aware is one thing that we need to put effort into. Lastly, the response of our banks has been also very encouraging. It has been a very big process to get banks to actually do all their risk analysis and all that, and then start coming through. So we have our first 3 banks that have come on board, and the beauty is these are regional stroke international banks that have now started coming through with very sizable liquidity that is starting to oil our markets. The participation of capital market players has not been as expected, and this is work that between us and the Commission we now need to do, so that we plug that gap, because we need a mix of financing. So that has also been a bit of a slow. That banks have been faster than our capital markets, and we need to correct that. I will take the opportunity to then say we are looking forward to now a very big year. Production statistics are looking very encouraging, and all the final pieces that we needed in terms of alignment with our regulators are in place. The marketing season is starting on the 1st of April, and we'll be making lots of announcements, and the opportunities remain huge, and we need participation from everybody, even an individual person with a few dollars that they can spare. This is an investment opportunity that can give a return, impact our economy, impact our farmers, and ensure that production is now transformed into business rather than subsistence. Thank you.
Colin, thank you very much for that very vigorous clarion call to Zimbabwe and Zimbabweans, and for people who are interested in participating in the capital market. There are gaps, there are challenges, as there always will be, but this is an entirely new development, a coming together of historically disparate pieces of legislation that have been brought together. And I think the impetus is now being created. And when you overlay the work done with what promises to be a particularly good season, I think we are looking forward to seeing the developments in this sector. Obviously, as the regulator, all we endeavor to do is to provide an enabling environment, enabling legislation in discussion with other financial markets regulators and other wider regulators to ensure that the solutions we bring, which have an impact on our people, on communities, and have the ability to financially include Zimbabweans, those are the solutions that we are focusing on. So let me thank you again, our presenters, Mr. Clemens Tadera-Bwenje from the Ministry of Lands, Agriculture, Fisheries, Water and Rural Development. Thank you, sir. And from the founder and CEO of the Escrow Group, a member of the regulated entities of the capital market. And to all of our participants this morning and the technical team behind the scenes, I wish you a good day and look forward to meeting you again at the next webinar. Take care and have a good day.
Thank you very much.